Hello, everyone. Good morning to you from this part of the world, and good afternoon, good evening to you, depending on which time zone you are tuning in from. I'm very, very excited as always to welcome you to today's Forex Morning Mastery. In fact, our last edition for the week. Well, my own name is Sheriff Daramola, and for the next 30 to 40 minutes, I am going to be your host as I will be taking you on a trading journey where we shall be evaluating the financial market from both technical and fundamental perspective. Well, it's the last trading day of the week, and you all know what that means, especially for those of you who have been with me for a while now. Markets tends to behave differently as market participants close out positions ahead of the weekend, locking in profits, managing risk, and making final moves before Monday's open. We are going to definitely take all of this into consideration while we review the current market dynamics. Of course, due to profit taking activities, we may likely see reversal setup as price action moves in the opposite direction of price action. And in fact, this week so far has been quite interesting. Remember, we have been monitoring three financial instruments, which includes the USOILSPOT, the GBPUSD, and of course my favorite, the XAUUSD. And we saw how gold is making waves right now. It broke past the psychological 2,700 mark to hit a new all-time high around the $2,720-ish. What's a phenomenal week it is for gold, and this also gave us some significant amount of profit to bank on. So we are going to be looking at that one too in a moment, and we are going to be looking into the chart considering the fundamental factors to know whether this momentum still has a room to continue to the upside, or we may likely see market participants take some profit off the chart as they round off their trading activities ahead of the weekend. And we also have today's session is going to be packed with actionable insight. We are going to be unpacking the drivers behind the surge in gold, as well as digging into other market moving forces from the ongoing geopolitical tensions in the Middle East to the global oil market outlook. We are also going to be taking a peek into the recent pullback in the US dollar, which obviously has given some interesting opportunities as since we are monitoring the GBPUSD, we saw some rebound in the pound sterling, which was further catapulted by the surprising UK retail sales data that came in this morning. So it's going to be a very, very interesting session. I encourage us all to stay tuned in so that we do not miss out on these interesting ideas ahead of today. And for those of us who are joining for the first time, you're highly welcome on board. I'm very excited to have you around with me. The Forex Morning Mastery, we do this 3 times in a week where we all come together as a community to review all the assets I personally trade week in, week out. So we do this every Mondays, Wednesdays, and Friday. So buckle up because this is going to be an exciting ride. And if you have any questions whatsoever, feel free to engage in the comment section. I'm here and willing to be of help in that regard. And do not forget to give the video a thumbs up. Your likes are valuable to me, and of course it also a way of you supporting this community to grow, and thank you very much as you do so. I see your comment, Jonah Aruna. Good morning to you. Glad to have you around this morning. So with that said, here we will be diving right into the business, and as always, the first thing we normally do every morning is to keep tabs with the fundamental factors that will be influencing the sentiment in the market today. Of course, based on the asset we're monitoring since the beginning of the week, that is the US oil, the GBP, and of course the XAUUSD, we have been focusing on high impactful event from both the United States and the United Kingdom economic docket. And on days where there are no high impactful event, we include mid-tier economic features. Now let's look at what has happened through the course of the week. So on Monday, we had a bunch of speeches from Fed officials and of course the Bank of England governor. And Bank of England monetary policy officers too as well. And then on Tuesday, we saw labor-oriented data from the United Kingdom, which actually bring in some mixed reaction. We saw that unemployment rate actually reduced, which was a very good news for the pound sterling. However, the other labor-oriented data like the claimant count change came in higher than market expected, which was not a good figure at all. We also saw the employment change to also come in higher than market had expected, which is considered to be another good one. And as a result, due to this this mixed data, the market wasn't really comfortable banking on this data to move the pound sterling. So we saw the GBPUSD go through a little bit of choppy market conditions this week. Then we also saw the New York Empire State Manufacturing Index on Tuesday, and this data gave us an insight into the health of the manufacturing sector in the New York City. And we all know how how sensitive the manufacturing sector is to the United States, and the data here was very woeful. It came in at a deficit of 11.9, and I guess the market reaction on that day was quite negative against the US dollar. Then on Wednesday, another important event came up from the United Kingdom. That was the Consumer Price Index. Now, for those of us who are joining us for the first time, or probably you are not familiar with what the Consumer Price Index is, we talked about this on Monday. This is considered to be an inflationary gauge data, where the data is a result of the measurement in the average change in prices of goods and services in the last 30 days, indicating the inflation level in the United Kingdom. And usually, when the CPI data is high, it signals rising inflation, which may lead to the central bank raising interest rates, and this usually strengthens the currency of that economy. However, if the CPI data comes in lower than market had expected, it could weaken the currency and, of course, influence monetary policy decisions negatively. Now, the CPI data on Wednesday came in lower than what market had anticipated. We had the month-on-month at 0%, which was way below the previous month, and of course below what market had expected, which was projected at 0.1%. Then the year-on-year came in lower, 1.7%, lower than the previous month, and of course lower than the projection from market participant. And what does this tell us? It tells us that inflation is thinning out in the United Kingdom, and that there could be chances that interest rate will be dropped further, and this resulted in a downward pressure on the British pounds during the course of the week. And considering the strength of the US dollar, we saw how the dollar capitalized on this data. Then we also saw the producer price index, another inflationary data, which gives us an insight into the prices of producers, that is the change in prices that producers receive for their goods and services as well. The data also came in below market expectations. Then fast forward to Thursday, we saw another impactful event from the United States, and that is the retail sales data. Now, for those of us who do not know, the retail sales data is a measure that takes into account the total receipt of retail stores during this period, and this further gives us an insight into the consumer spending in that economy. So if it is high, it shows that a lot of people were doing buying, they are buying commodities, goods and services during that month, which further tells us that the economy is doing very well, and citizens are feeling comfortable with that economy. And we saw the retail sales data from the United States come in higher than market had expected, showing some resilience in the US economy as well. And then fast forward to this morning, we saw the retail sales data from the United Kingdom, which came in way higher than market had expected. We were looking at a deficit of 0.3%, and what came in this morning was 0.3%, way 3 times higher than the previous month data, showing us that the consumer spending in the United Kingdom has increased tremendously. And of course, the immediate market reaction to this was quite positive, as we saw the pound sterling rise in momentum this morning. So we are going to be looking at that one too in a moment, and let's see if there is more room to capitalize on more buying opportunity, or could this positive move turn out to be a false one that could incite selling pressure later today. Now, while we look forward to today's trading session, what are the events that could likely influence how market participants will behave today? Well, from the data we have here, there are no other high impactful event, but after including the mid-tier economic features, you will see here that we have a bunch of speeches from Fed officials from the United States. Much later in the day, we have Bostic speech, we have Kashkari, we have Walla, we have Bostic again. So these are events we want to be monitoring. These are Fed officials, and whatever they say today will be giving market participants an insight into the economic outlook of the United States, and of course potential monetary policy decisions that may likely happen next month. So we want to be marking out this timing so that we can be around to see how we can capitalize on this opportunity. And one thing we all know here as technical traders is that the anticipation of this event usually has its own way of influencing the behavioral patterns of market participants. So as they anticipate this event, they position themselves accordingly. I mean, the big players in the market, and this positioning evolves into structural patterns that we technical traders can actually use to understand what they are thinking, and of course use that to strategically position ourselves for the next move. So with that said, here we will be diving right into the charts. So let's see what is going on from a technical standpoint after taking into account the market drivers. So as always, the first asset we will be taking on this morning is going to be the USOILSPOT. And so far this week, after remember at the beginning of the week we were selling the USOILSPOT. So after that first massive sell we capitalized on at the beginning of the week, remember we had about over 300 pips in profit on that one. The market had remained very choppy, consolidating within a specified range bound since Tuesday's trading session. So that's about how many days that is? Tuesday, Wednesday, Thursday. Over 3.5 days, the market has been consolidating within a range bound structure, as you will see here. And as a result of this, we can tell that there is an indecision going on in the market right now, where market participants are not sure where price is likely going to be heading. And in fact, we have multiple drivers behind the scenes which has been influencing the sentiment in this market. And of course, one of the major ones that influenced the strong bearish momentum we saw at the beginning of the week was the US crude oil production, which reached a new high of 13.5 million barrels per day for last week, potentially limiting the upside for oil prices. And of course, we all know from our simple economics that whenever there is high supply, there is going to be surplus of this commodity in the market, which usually will suppress prices because of the availability of the product in the market, and as a result we see price drop significantly to the downside. Now, to further support the supply in the market, we saw the resumption of the Libyan production, which resumed during the course of the week, and this further contributed to keeping a cap on oil prices. Then we also talked about on Tuesday or Wednesday, I think, we talked about OPEC and its allies planning to unwind production cuts in 2025, which could also affect the global supply demand. And then the IEA, the International Energy Agency, also projected that there's going to likely be a significant surplus in the global oil market this year and next year. So their projection for this year and next year was that there will be low demand, and with demand and due to the slow economic growth in China, we could see low demand from China too as well. Remember, China is the largest importer of crude oil in the world, and right now the market in China that oil usually bank on appears to be reducing, as we can see a shift towards electric vehicles in China. Now, if the demand from China reduces drastically, we may likely see oil prices drop to as low as $50 per barrel, maybe before the end of next year. So these are not really good news for buyers of the US oil spot. However, the last 3-4 days has seen some rebound sort of, which has lacked follow through, and the rebound could be attributed to some couple of factors which we have emphasized week in, week out, like the heightened geopolitical tensions in the Middle East. Now, recently we saw overnight this morning, while I was listening to the news, we heard of the killing of Hamas leader, which has also added support to oil prices and concerns over potential disruption in the region if escalation goes to retaliate the killing of Hamas leader overnight. Then the Energy Information Administration report for last week also showed that last week saw an increase in crude oil stockpile, which for me is not a supporting factor actually. Now, taking into account of all these informations we have here, how is the market actually digesting this information? Now, let's look at what happened at the beginning of the week right here on the chart. Remember, we had this range bound structure identified, where at the beginning of the week we saw price confined within the $75.60 level and the $74.05 area. And of course, we were part of this bearish move as we saw price break down, retest the support line to give us that 300 plus pip to the downside. And since price tested that area around the $70 level, we can see that sellers have found it difficult to break through that particular area. Now, as a result of the inability of sellers to break through that area, it was a red flag for us that we may likely see this area as a platform for buying opportunity. Now, after identifying a descending trend line within that range bound structure, we were looking forward to price breaking out, retesting the trend line to capture some buying opportunity. As we saw, price broke out, retest this trend line multiple times. I think this retest lasted for about 25 to 36 hours before this recent bullish traction resumed in this market. Presently, I do have a buy position still running, but still struggling at this point, as we still see any sign. We are still not seeing any signs that buyers could follow through this momentum. There is no strong fundamental driver behind the scenes that could push price to the upside. So for me, I may likely get out of this market very early today. There are no major impactful event from the United States that could help bring some fresh impetus into this particular market. So I will see how this is going to play out for the next couple of hours. If the momentum doesn't seem to show any sign that it will rise, I will just take out and close all my buy position in whatever pips it is at that point. Now, looking at the 15 minutes time frame, where we did identify a setup on Wednesday. For those of you who are part of the Forex Morning Mastery on Wednesday, we talked about buying above the $70.75 level, which is currently running at this point. And of course, we're still looking forward to adding more above this area. So I want to monitor and see how the price action will be reacting to this area. So you can see here that in the last let me see, 1 2 3 4 5. So in the last couple of hours now, price action has been oscillating around that $70.75 level we identified here on Wednesday. So I still maintain the bullish bias here if price remains above that area, and let's see what happens. I'll just give some time for this one, maybe about 2 to 3 hours, wait for the New York session to open, and let me see how the US counterpart will be trading this market. So if it drops further, I will just close that trade in whatever level it is. Now, the only condition that will make me sell the USOILSPOT today is for the support line here. Remember, we talked about this on the 1 hour time frame. This is the support line for this week. Every time price comes into the structure, we see buy pressure resume from that particular area. You can see what happened here on Tuesday. Price climbed up from this area. We saw what happened here on Wednesday. Price climbed up from the area, and look at what happened here on Thursday. Price climbed up from that particular area. So for me, this area is still looking promising for buyers. Now, if I do want to consider selling the USOILSPOT, I would rather want to see price take out that demand zone, break it to the downside, and of course wait for confirmations like retest of structure on my lower time frame before jumping into a sell position. So I need that retest of structure as a sign that buyers are finding it difficult to climb back above the $69.85 level. So the appearance of selling pressure on my lower time frame, like the 5, 10, 15 minutes time frame here on the below the $69.85 level, would be a beautiful confirmation to join a decline. So that is the only condition for me to sell at this point. So like I did say earlier, still maintain a bullish bias. I still have a buy position running at this point. Hopefully price will break out of the $71.50 level, but if it doesn't and price continues to oscillate, and the first couple of hours of the New York session, I don't see any signs that buyers will gain some traction, I will just close this trade. So this is my simple idea on the USOILSPOT for today. So let's see how the market is going to play out around this area, and if there's anything new that comes up along the line that we never talked about here, I will definitely update us on both my TradingView and Telegram platform. So this is my simple view here. If you have any questions or you need some clarifications as regards to what we talked about here, feel free to let me know in the comment section. So I'll take the next 10-15 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in. All right. So I see a couple of comments here. Odueno, good morning to you. Oh, you're very much welcome. I'm glad you found them very useful. How was your trade this week? Hope you were able to scoop in some profits, at least for the week. You're very much welcome, Odueno. Tamiklo, hello, Tamiklo. How are you doing? Good morning to you. So Tamiklo says, I'm having a challenge joining the Go challenge. It says my region does not support the feature. Oh, I see. I see. Well, I think I have a couple of a lot of people as well who have made this complaint as regards to this. I think there are some regions truly that YouTube has not allowed to be able to do this, to be able to join YouTube membership of any channel, and of course, um, there's nothing I can do about that. I can only um, there's nothing I can directly fix on this issue, as this is a YouTube thing. I can only offer suggestions based on common problems I've seen so far. And maybe I will say I'll direct you to the YouTube's Help Center for official solutions. If there could be some preferences or advices on that one, you can contact the YouTube Help Center in that regard. Or maybe try something which I just thought of right now, I've not done before. Maybe have a VPN and then do this from another region and see if it's going to work. I'm not sure that if that is going to work, but you can give it a try and see if it's going to work. And well, if it doesn't work, well, there's nothing I can do as regards to that. But I'm also considering maybe having a platform on my own where I can be able to launch this kind of platform like the Go Challenge, where it wouldn't be subject to YouTube or any intermediary, where everyone can actually join in from wherever they are in the world. So I don't know. Let's see how that works. Try the VPN thing or contact the YouTube Health Center to advise accordingly. All right. I see Leon too as well. I'm very sorry about that. I have a couple of people like that who says the same thing. All right, please try those options I said and let's see if it's any of them is going to work. contact the YouTube Help Center or try a VPN to do it from, choose a region where it is available. Okay. All right, everyone. So in the absence of no questions, I want to assume that we are all on the same page. And please don't forget to give that video a thumbs up. Your likes are very important to me and also a way for you to support the community to grow. Thank you very much as you do so. So with that said, let's move right into the next assets on our watch list. Stay tuned in. So the next asset we are looking at this morning is the GBPUSD, that is the British pounds against the US dollar. And what an interesting week we have here on the GBPUSD. Remember, at the beginning of the week, we were buying the GBPUSD. We had a modest size of profit before that strong bearish momentum came in on Tuesday. Was it on Tuesday? Okay, on Wednesday, following that not too impressive data from the United Kingdom Wednesday morning. What data was that anyways? Let us check quickly. So on Wednesday, okay, the consumer price index came in way below market and expected, prompting the idea that the Bank of England will be cutting interest rate next month. And this threw the GBP USD off the rails, giving the US dollar some advantage to capitalize on. I personally missed out on that opportunity. That move happened very early on Wednesday morning, and I was just getting myself prepared for today when that happened. But for those of us who joined the bearish move, well done to you guys. Well done on that one. Now, during the Wednesday's trading session, that is the Forex Money Mastery on Wednesday, we had a new trading setup which we said we were going to be using to navigate the second half of the week, and this was it right here. And one interesting thing about that Wednesday session is that I did emphasize here on the Forex Money Mastery that there are no there were no immediate positive driver for the GBP, for the pound sterling, as most of the market reaction have been negative due to weaker than expected inflation data, which of course could have pushed the Bank of England to consider cutting interest rate next month. However, I went on to emphasize that there could be some potential positives which could emerge from other areas in the broader economic landscape, even despite those woeful data. That is, the idea of cutting interest rate could actually stimulate economic growth. As you all know, while interest rate remains low, though it makes the currency very weak in the short term, but it could eventually boost economic growth by making borrowing cheaper and potentially leading to better business conditions in the long run. And this could probably later on be a driving factor for the British pounds and could bring some buying opportunities. And of course, it appears we're beginning to see something like that, but I'm still not yet confident that the British pound has a long-term bullish perspective at this particular point in time due to where price action is right now. Now, let's quickly take a look at the technical structure we talked about here on Wednesday. Now, the first thing we talked about here on Wednesday was a descending trend line, which you can see here after connecting the series of lower highs since Monday, Monday, I think about 2 weeks ago, we had a beautiful descending trend line which was supporting the bearish momentum. And of course, you do know how we use our descending trend lines. As long as price remains below them, we will continue to look out for patterns and structures that support the idea of selling. Now, besides that descending trend line here, we saw a couple of levels that we said we will be using to navigate the market. We had the 1.30625 and the 1.30350, an area which was serving as a demand zone prior to the CPI data that resulted in this vertical engulfing bearish candle that sliced through that demand zone. Now, from a theoretical perspective, whenever price action breaks out of a key structure like this, we do expect that price at some point will come back, retest the structure in an attempt to join the decline to the downside. So with this understanding in mind, we identify a potential window between the 1.30625 and the 1.30350 area, where I mentioned that we could place a sell limit anywhere within this particular area. So anywhere is just going to be quite fine, and then make sure you have your stop loss way above the structure to give enough breathing space for price action to move around. Now, with what we saw here on Wednesday, price did not really go deep into the potential sell window, but we saw a trigger somewhere around here which made us join this short-term bearish move to the downside, giving us about 55 pips thereabout. I know majority of us will have missed out on that opportunity, especially the cautious one who are willing to wait for price to come deeper into that potential zone before jumping into a sell. But if you in any way took advantage of that one, well done, kudos to you. Now, during my commentary yesterday, I begin to notice that despite the strong bearish momentum we saw in the last couple of days prior to yesterday's session, we saw how it became difficult for sellers to break through the 1.29750. You see what happened here. You see what happened at this point in time. And for me, I consider this as a red flag that we might be seeing a diminishing momentum for the bears, hereby welcoming buying opportunities at this point. So with a consolidation phase identified here, we decided that we will be buying the breakout of the 1.300 area, which is psychological level. And look at what happened just prior to the New York session. We saw price break out of the structure. If you missed out on that one, the market came back to retest structure, and since that moment we've seen price action continue to the upside. And only one position we see price moved over 70 pips at this point, but currently about 45 pips is still inactive at this point. Now, going into today's session, what are our chances? Will this momentum continue, or is this going to be the beginning of the second leg of that bearish momentum that started on Wednesday? Well, if we take into account the drivers behind the scenes, what are they saying? Well, at the moment, if we look at the US dollar index, there is this current pullback from its recent high, as traders appear to be taking some profit following that strong rally, and this could provide some relief for the pound sterling, given that the pound sterling an opportunity to gain some momentum at this point. So I'm going to be banking on that possibility for the pound sterling to rise today. And then in addition to that is the surprising UK retail sales data we saw this morning. We talked about this earlier on. Let me show you quickly. So we saw this happen this morning. Retail sales data 0.3% as against the market expectation of a deficit of 0.3, and in fact it was way higher than the data that came in the previous month. And this tells us that consumer spending in the United Kingdom has increased significantly, and this could further bolster the pound sterling in that regard. So I will be banking on that one too as well as an opportunity to buy the GBPUSD if we see structures that support that idea. Then, in as much as these two factors support the ascent of the GBPUSD, we cannot ignore that the CPI data from the United Kingdom dropped significantly, and which of course is below the Bank of England's inflation target. The target is 2%, and of course we've seen the CPI drop below 2%, which signals weakening inflationary pressure and adds the downside risk for the pound sterling, as we may be expecting the United Kingdom's the Bank of England to cut interest rates next month, and this is not a very supporting factor for the pound sterling, as investors will want to be dropping it for a much higher return on investment like the US dollar in this case scenario. Now, despite a slight US dollar pullback we've seen recently, the Federal Reserve is still anticipating a modest rate cut over the next year, and is expected to prevent a significant loss in the US dollar at this point. So this may cap the upside for the GBP USD. Now, if we take all this theoretical understanding in play and put it to the chart and see how market participants are digesting this information, the price action on the chart should be able to reveal to us what is likely going to be happening next. And of course, we are going to be banking on that structure we marked out here on Wednesday. Now, following the strong impulsive move we saw here this morning, price got into the 1.30700 area, and then we saw price drop to the downside. Now, one thing I would like to call our attention to is the fact that price action now is within, if you look at this closely, you see price action right now is within that potential supply zone that we talked about earlier. So remember, I was telling you on Wednesday that we will likely sell within this particular area. And look at what happened as soon as price got into that sell window. We saw price drop significantly back into structure. Now, remember, this area was a demand zone before. This area was a demand zone. It was an area where market participants were finding the pound sterling cheap enough to buy before this huge breakdown happened. So now the question we are going to be asking as we head into today's session is, are we going to be seeing this as a retest that will incite a downtrend continuation, or will this demand zone we identified here become another platform to send price going to the upside? So you can see we are at a crucial juncture at this point in time, where depending on how the market reacts to the zone today will determine what we are going to be doing next. Now, with this information here, let's look at the structural details on the chart. Now, the first major structure here is this descending trend line. Now, look at what happened this morning. Price did break out of that descending trend line. Let me zoom in so we can see this clearly. So price broke out of this descending trend line this morning, and theoretically speaking, we do expect that some point in time price may come back, retest the structure in an attempt to continue the uptrend move. Now look at what has been going on here. In the last 2 hours, we can see price oscillating around that descending trend line. So will price retest and continue the uptrend move, or will this trend line be broken to the downside? And of course, if it gets broken to the downside, we are back within seller's territory. But if it maintains above that area, we are within the demand zone we identified during the first half of the week, and this will catapult price to find new highs. So what structures are we going to be using to guide our decisions today? Well, the descending trend line first of all, and then the second one here is the 1.30350 area. So now let's zoom into that area right now. So since price is here Are we going to see continued buy pressure around this area to incite more buying opportunities? Well, I think we'll need to exercise patience here. If we can see continued buy pressure like a double bottom structure on our lower time frame, it will be a good opportunity to buy at the breakout of its neckline. But if price action drops below the trend line and we start seeing selling pressure come in, this could incite a sell-off to the downside, as we will be back within seller's territory. Now, one thing I would like to mention here is that it's not reasonable to sell just at the site of a breakdown. A breakdown could happen. It could turn out to be a false one, evolving into a double bottom structure where the breakout of the neckline could incite buying opportunities. So you can see price could still break down the structure and in fact evolve into a reversal pattern. So we need to take that into account while we monitor price action around this area. Now, to help us navigate this area very well, we will need to scale down into like a 15 minutes time frame here. So I would like this structures to be revealed on the 15 minutes time frame. So I don't need this one. I don't need this one as well. So let's see, we only need the trend line and the 1.30350 on the 15 minutes time frame. So let's go down to the 15 minutes time frame. I think we're beginning to see a reversal setup evolve here on the 15 minutes time frame. So look at what we have right now. So we have price back into the trend line on the 15 minutes. Price comes into the 1.30500 area. It drops back down. Price is unable to break down the trend line. If this continues like this, we will be seeing a neckline. We'll be seeing a double bottom structure where a neckline around the 1.30480. Let me use my line chart to have a specific point of contact. So this is it right here. So we have 1.30460. So you do want to be marking that out on your chart. 1.30460 level right there. And then this should just show on my 15 minutes time frame. I don't want a clog on my higher time frame. So here we go. So we have the 1.30460. So what I'm going to be doing right now is to see price breakout, retest this neckline. If that happens, this will be the beginning of the second leg of that bullish momentum. And of course, stop loss will be way below the previous low, which is somewhere right here, and that's about 12 to 15 pips of stop loss. I think the risk reward ratio on this one will be quite reasonable to bank on. So that is how I would like to continue the uptrend from this particular area. However, if price action drops below the trend line, that's around the that's 1.30350, okay, 30350. That's the lowest point around this trend line. So if price drops below the 1.30350, then we are back within the seller's territory, as price is now below that descending trend line we talked about on the 1 hour time frame. So I will look for price breakdown, not just breakdown alone. I would like to see some retest on my lower time frame before jumping into a sell. So you can see our center of focus this morning for today is between the 1.30460 and the 1.30350 area, where depending on the direction of the breakout will determine if we are going to be buying or selling today. So please, let's mark out these levels accordingly, as we are going to be needing them as a reference point to guide our decision. So personally, if you ask me, I'm looking forward to an uptrend scenario here due to the recent data from the United Kingdom, but we never can tell what the speeches from the Fed officials today will the signal it will send into the market. And if it drops below the trend line, then we have no other choice than to listen to what the market is saying. So this is my simple view on the GBPUSD for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking about 5-10 seconds off. Let's see if there are any questions before we move on to the final asset on our watch list today. So please give that video a thumbs up and let's support this community to grow. Thank you very much as you do so. All right. So I see a couple of comments. Tamiklo, all right, you're welcome. You're welcome. Saeed, oh, all right. So you also have the same. Okay. Please just try those options I gave earlier. Let's see if those will work, and let us have a feedback. So you also said you're a web developer and I can help you out in creating your own platform. Wow, that would be great. You can send me an email. My email is scrolling right at the bottom of the screen, or you can check it in the description box of this current video. Please send me an email and let's see how we can work together on that one. All right. Thank you very much, Nasir. Okay, so in the absence of no further questions, I want to assume that we are all on the same page. So with that said, let's move right into the final asset on our watch list for this week. So the final asset on my watch list for today is my favorite amongst them, and that is the XAUUSD, popularly known as the gold spot. And what a phenomenal week we are witnessing on the gold commodity. Again, another all-time high has been found above the $2,714-ish area as price keeps on breaking barriers. And in fact, the recent development in the global landscape is in fact helping the gold to continue to rise. In fact, in some financial corridor, there is this projection that gold may likely hit the $3,000 mark before the end of the year, or by the end of the year, which is something positive. And of course, the sentiment has continued to give the gold strength despite the US dollar doing very well in the last 1 week. Now, one of the factors that has been supporting the gold as well is the major central banks, including the Federal Reserve and European central banks, have been cutting interest rates and are expected to continue easing monetary policy, making gold more attractive as a safe haven asset. Now, when interest rate is cut, all of these currencies become very cheap. Becomes devalued, hereby making the gold commodity very, very cheap to buy. Now, this will continue to support the ascent of gold prices. And of course, the recent pullback in the US dollar also is providing support for gold, making it cheaper for non-US dollar buyers to acquire. Now, another factor that we cannot ignore is the escalation of conflict in the Middle East, the Israel-Hamas situation, the Hezbollah involvement, and the uncertainty. And the timing of the retaliation of Israel on Iran, where everyone is not sure when this is likely going to happen. And there are some speculations that it might likely happen before the US election, so we don't know when that is going to be. So this has also bringing some high level of uncertainty into the market. And the uncertainty around the US presidential election too has also boosted demand for gold as a hedge against any form of uncertainty that might come out as a result of this election. So I still think the path of least resistance for gold is still to the upside at this point, even though we are within uncharted territory. Now, with the situation we have right now, we still need to be very, very careful due to the uncharted territory we are in. Price has never gotten into this level before, so there is nothing that we can use to reference how market participants had behaved around this area before. So we need to understand and see how market participants are digesting the drivers behind the scenes using our price action to identify where and how we are going to be buying or selling around this area. Now, in as much as the gold's path of least resistance is still looking bullish, there are still some other drivers that could also cap the upside of this commodity. We are talking about markets already scaling back expectation of a large interest rate cut by the Fed in November, which limits a significant US dollar correction and holds back bullish sentiment for gold. Now, before now, about 2 or 3 weeks ago, there was this speculation that's going to be a 50 basis point cut, but based on the data coming in from the United States lately, this sentiment has been scaled back more, and now majority is speculating that it's going to be a 25 basis point cut. Now, the better than expected US retail sales data and that Fed business survey reaffirm a robust US economy, and this has lifted the US Treasury bond yield, lifted the US dollar, and could dampen any appeal for gold at this point. So we still need to be very careful in as much as the path of least resistance remain bullish. Now, before we go into how to navigate to this market, let's quickly run through what really happened through the course of the week. Now, if you remember vividly, our structure at the beginning of the week was quite a simple one, as we saw here on the 1 hour time frame, where price action initially was confined within this range bound structure between the 2,656 and the 2,643 area, giving us a consolidation phase to work with. And of course, I think we had the privilege of joining a sell at the beginning of the week. I can't remember what happened around this area, but one thing for sure is that when we have a range bound structure, what we usually do is exercise patience and wait for price to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. Now, for the first trading day of the week, we had a little bit of choppy market condition. I think we bought the gold around the 2,658 area. I can still remember this one, which did not do very well. We was topped out in a loss on this particular one before we finally regained some momentum, recouped the loss we recouped the loss we incurred, and of course made some more profit on it. Now, on Tuesday, this was the setup we had on Tuesday. We identified a temporary demand zone. For those of you who are following me on my TradingView and Telegram platform, we identified this temporary demand zone, and we did agree that we want to see price action breakout, retest of this descending trend line for us to join that uptrend move. And look at what happened right here on Tuesday, a breakout retest, and since that moment price action had continued to find higher highs and higher lows. But unfortunately, I was unable to have multiple entries on this trade. As you will see, I only had one position running all through, and the reason why I did not had multiple entries is due to the fact that we are within uncharted territory. Price could crash anytime, and I do not want to expose myself too much in this kind of area, so I just had to keep one position running and just let it run through and see how far it's going to go. But thank goodness we were able to take something out of it. Personally, I got out around 2,700 yesterday. I placed it here before I went to bed, and this morning when I came, I saw that price action has broken out of the 2,700 and in fact added some more, I think about 80 to 90 pips thereabouts on top of it. So now going into today's session, and secondly, let me just congratulate everyone who has been part of this profitable journey. Well done, and kudos to you guys for being faithful to our analytical approach. Now going into today's trading session, how are we going to be navigating the structure? So as usual, I have a new trading setup that will be helping us navigate this current market dynamic today. And is it on my 15-minute? Okay, it's on my 1 hour time frame right here. So what I did here was to take into account the character of price action this week, and of course you can see we have series of higher highs and higher lows. In fact, I have a couple of trend lines here after connecting the series of higher lows, and you know how we use our ascending trend lines. As long as price still remains above this ascending trend line, we will continue to look out for patterns and structures that support the idea of buying. And if we zoom right into the current structure here, so this is the highest point price action has been for this year, even for that has ever been whatsoever. So the $2,714.25 level. So we see price test this area, drop to the downside, and it appears price action is gradually approaching this level. Now, before I even go any further, for those of us who still have an active buy position at this point, please move all your stop losses, secure the current position, as we may likely see some crash at any point in time. Remember, when price action hits an all-time high, there is this psychological expectation that price may crash at any point in time. That is the fear of missing out, FOMO. And if this persists in the market, we may see major key players taking some profit off the chart in the meantime, and this could result into seeing choppy market conditions, retracement moves, or even consolidation phases around this particular area. So it's very important. Move your stop losses, secure your positions. Now, with the situation we have right now, there are two things we are going to be looking forward to. What is going to be the structure we will want to see to sell, and structure we want to see to buy. Now, first and first here, there is the possibility of this whole situation evolve into a reversal setup, like a double top structure, where the neckline of that double top structure could signal a sell-off. That is one scenario we are looking at, and in fact, if that happens, a price will also have taken out these ascending trend lines we marked out here, breaking into the downside, breaching it to show that the trend line may no longer have the capacity to maintain the bullish bias anymore. So that is one scenario I'm looking forward to. Then the other one is this whole structure evolving into an uptrend continuation pattern. It could be a bullish rectangle, a pennant, or whichever case it may be, the breakout of the structure welcoming more buying ideas. Now, to help me navigate the structure, I have a simple setup on the 15 minutes time frame. Now scaling down into the 15 minutes time frame, this was what I saw here this morning after looking at the structure. So this is the highest point price action has been, as you will see here, the 2,714, and then I was able to capture this move. I actually missed out on it. I captured it quite all right. I went outside to give my dog food, and before I came back, I saw this drop, and price did not give me the opportunity to join, but it didn't last long, as you will see. And I'm beginning to monitor to see how the market will react around this area. So for me, I'm considering this area between the 2,714 and the 2,710 as a sell window. I will explain to you why that is in a moment. So I want to consider this area as a supply zone. Is the highest point price action has been, and due to the expectation of choppy market conditions, we could see price crash from this area, like I did show you on the 1 hour time frame. So you can see what has happened here. This started from during the Asian session. We saw price drop from here. We saw price drop from here, and right now price is back into that area. So will price start dropping from this area? Well, if that is going to be the case, a breakdown retest of the 2,710 could be a good signal for me to sell. Now, while we sell here, we are not going to sleep. We are going to be alert. We are going to be on standby. As soon as price moves significantly in our favor, we move stop losses, secure the position, and then see if the momentum will continue to the downside, as we could still see price climb back up. So between here and this trend line is about 40 pips. So if price drops, hold on a second, price drops like this, it gets into the trend line, move your stop loss, secure the position. And if the trend line gets broken to the downside, we will be looking at adding more sell positions to our existing trade. So let's see how this is going to play out today. Now, if that is not going to be the case, and instead the demand for the safe haven continues to rise, then a breakout of the highest points this year or ever is going to be welcoming more buying opportunities. So you can see how crucial this area is. Our center of focus is between the 2,714 and the 2,710, where depending on the direction of the breakout will determine if we are going to be buying or selling today. So let's see how the market is going to play out around this area. And for those of us who are part of the Go-Go Challenge, I will try to see how we will scalp the market around this area. Though it's very risky scalping uncharted territory, but we shall see. If there is any opportunity, we'll do it. And if there are none, then we'll probably call it a day for the week. So let's see what happens around this particular zone we just identified here. If you have any questions whatsoever, feel free to let me know in the comment section, and do not forget to give that video a thumbs up. We had over 12 people on board today, and we're only having 7 people that had liked the video. Let's make the number of likes tally with the number of people on board, and thank you guys as you all do so. And for those of you who had clicked on that like button, I really do appreciate your support. Thank you very much from the bottom of my heart. So I will take the next 10-15 seconds. Let's see if there are any questions before we start rounding off on today's Forex Morning Mastery. See you soon. All right, guys. Thank you very much. I really appreciate your support, everyone. Thank you. So I can see a couple of comments here. Saying Torres Master here after such a long time. How are you, Torres Master? Trust you're doing very well. It's been a while. Yes, it's been a while indeed. Trust you are doing very well, Torres Master. Okay. Said says that Wednesday, as per your knowledge, I have increased my stop loss below that increasing trend line and still in profit from 2006. Wow, that's interesting. From 2660, and you're still holding that trade. I'm really impressed. Well done on that one. I was taking out at 2700 when I woke up this morning. I saw that, so I'm still looking forward to joining again. So I'm still monitoring price action at this point. Said says, do you think as today is the weekend, so we will take some profit taking activities today, and at what level? Is that the question? I didn't see that one correctly. Is that activity on this taking activity on? Okay, let me see that again. Do you think as today is the weekend, so we will take some profits taking activity today on this level? Yes, please. I think it's high time you want to be moving your stop losses, secure some profit at this juncture. And if you would ask me, I would suggest anywhere around the 2706 is looking reasonable, which is which is right below this ascending trend line we have here. So 2708, 2706 area is still looking promising to move all stop losses to, while we also keep enough breathing space for price action to move around. So let's see how the market will play out. Around that area is reasonable to move your stop losses at this point in time. So I hope I answered your question there, Saeed. All right. So in the absence of no further questions, I want to assume that we are all on the same page, and it's on this note we have come to the end of today's Forex Morning Mastery. I really enjoyed the energy this morning. It was quite engaging. I really loved it, and I'm glad to be with you here this morning. So as always, we were able to take on all the three financial instruments on our watch list. And for those of you who are joining in late and probably had missed out on at the beginning of the session, don't worry, the live session is still available for you to watch as a replay immediately after the end of this session. So you can stay around while the session closes. You can easily go through all of the session all over again, and they are duly time stamped. So I want to wish us all the best of luck today, and please always remember that trading the financial market is a risky business, and that every decision we make is considered to be an educated guess until price action hits your TP target. And with this understanding in mind, you do want to be having a well-defined risk management strategy in place. And all structures, I hope you mark them out as we did accordingly. They are our yardstick, they are our guiding light for every trading decisions we make. Very important for you to do so. And if you have done so, well done, kudos to you. All we just need to do is exercise patience and allow these structures to mature. For those of you who are joining us for the first time, I do hope you were able to gain one or two things from what we discussed here today. And if you did, you want to be part of our subsequent editions, trust me, the more time you spend with us, the better you get to understand my analytical approach, which eventually will help you in improving your own trading strategy. So I look forward to seeing more of you. Same time on Monday, 9:30 a.m. West African time, 8:30 a.m. UTC. And if you are yet to subscribe to the channel, please do. I will be dropping some insightful updates during the weekend in my preparation for next week. You don't want to be missing out on these ideas ahead of Monday's Forex Morning Mastery. So click on that subscribe button. And for those who are yet to click on the like button, please do support this channel. And thank you for inspiring me to do more. So it's on this note, I want to wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening and a wonderful weekend, everyone. Bye.